Watch the whole movie.
Yeah, he was into it, huh?
He would love it.
Good.
Absolutely love it. So, we're going to go over Life of a Loan, you guys. So I want to talk to you about everything for what to expect from beginning to end. Once you get that contract, right? Where the banks go, what they do. The kind of like, I'm going to open up the curtains and show you what's behind the scenes, what we've got to run through in the matter of, I don't know what, 8 or 9 days. So it's a sprint for us. Not all banks are created equal, but we're definitely moving nonstop during the no pun intended, during the entire process. So I am going to share my screen with you guys. Let me know if you can see that. I'm also going to try to open up the chat here. So if anybody has any questions, please don't hesitate to just speak up. Open up your mic, ask questions. We're going to be going through quite a bit here in a relatively short order. So let's see. So Life of a Loan, we're going to cover all of these topics today. There's a lot of stuff going on behind the scenes. And it starts with a pre-approval process, obviously. Please keep in mind, not all banks are created equal. You can go out, look, if you need to go get a pre-approval letter, you can go on a website and get one in minutes. You can plug in whatever information you want and you can get approved for whatever dollar amount you need. But where is that going to lead you? That is not exactly where you want to be out shopping with a pre-approval letter from an online bank that doesn't even check anything. They just basically, okay, great. You put in the right information to make the algorithms work. Here's your approval letter, right? It doesn't quite work that way. It shouldn't work that way, you guys. Tell me if you can hear this. No? All right. So I'll sum it up here in a half a second for you. What that video was about is basically the old school way, right, of doing business. You would go in, you would sit down with a banker, at your bank, and you would have a conversation with them. And upon the end of that conversation, they would issue a pre-approval letter. They would send you home with some homework and they would say, hey, here's what I need you to do. I need you to get me some bank statements. I need you to get me some W-2s, some pay stubs. Oh, you're self-employed? Well, if that's the case, then we might need some tax returns, what have you. But in the meantime, they're going to give you that pre-approval letter. Does everybody go out there and actually do their homework? Not all the time, right? A lot of times people are just going to take that approval letter, go find an agent, or you might have come with them. You might have come to them, and gotten approved, and you would have not even said a word. Are you pre-approved with somebody? Yes, sure. I have a pre-approval letter. Okay, great. It is okay to tell people, and the most experienced agents I work with are like, hey, I understand you got pre-approved with so-and-so. I don't know them from the hole in the wall. This is the person that I work with. I know and I trust them. I know that they can close loans. I want you to at least have a conversation with them. It doesn't hurt. And all of my seasoned veterans that I work with handle it that way. I know that, new folks, you get a little bit scared. It could be a little bit intimidating to hey, just go have another conversation after somebody's already given you a pre-qual letter. But look you're going out there a lot of the times with these pre-qualification letters from like a Rocket Mortgage, a Navy Fed, a Wells Fargo. Like these guys, they don't do the thorough underwritings that we do. All right. So we, instead of just taking someone's word for it and sitting in a bank and issuing that pre-qualification letter, we approve them, right? So there's different layers of approvals. So pre-qualification is that conversation, no supporting documents. You don't even run credit. You literally just take their word on what they make, how much debt they have, and issue them a piece of paper. Pre-approval, okay? You're going to ask for some documentation. I'm going to get those documentations. I'm going to verify the information that they have provided me, right, during that application process. So we're going to take a look at their W-2s. We're going to take a look at their income and calculate it accurately based off of their pay stubs and their W-2s. If they own any kind of properties, we're going to do the calculations on what their existing debts are. If they're selling it, we're going to take that into account. There's so many different angles as to how much paperwork we're going to need, you guys. It really depends on the type of jobs that they have. And every job is a little bit different. And I'll tell you one thing, you go to better.com, these people do not know how to calculate income to save their lives. They don't do that. The underwriter does that. So what does Movement do? That's a little bit different than all the others. We actually go through that underwriting process up front. You know, what does underwriting mean in a nutshell, right? Underwriters are the people that work for banks that make the decision whether or not to lend you money. It's not me. If it was up to me, I'd give everybody money because I get paid on making that loan happen, right? So if it was up to a loan officer, we would give out, and that was the problem back in 2008, right? Because everybody and their mothers was getting a loan just because of the conversations that they were having. Well, that's not the case. That's not how it should be. So we're going to go in, we're going to ask for all this documentation, and we're going to take that loan and we're going to submit it to an underwriter, and that underwriter is going to review everything, right? And I'm kind of getting a little bit ahead of myself because I was going to cover this in the next slides. But I want you guys to understand, like, the documents vary depending on the type of job. If you're self-employed, it's going to be a totally different ballgame than if you're a salaried W-2 employee, right? I just had someone apply. I opened up their personal tax returns and they have 8 companies. You guys, if they own 25% or more of those companies, we need tax returns for each one. And guess what? They own more than 25% on each one. And these folks, they made oodles of money. They were sitting in on liquid cash. I'm like, what are you guys doing taking out a loan? You know, I get paid to do loans, but I get paid to give good advice to people. And there was no reason whatsoever they couldn't have bought a condo as an investment without like taking out a loan. It just made no sense. It would have made sense down the road to refinance and get that money out, but not right now. So we look at all these things. We look at a holistic picture of where somebody sits financially speaking, and we give them that advice and which way to go, right? So your pre-qualification process, you guys, we take all this paperwork, we take all the numbers that somebody put into their approval, into their application, sorry, brain fart, and we wind up submitting it through what's called an automated underwriting system. Has anybody heard of a DU or an LP approval? Yeah, put your hand down, Matt. Anybody else? Yes, no, maybe so. You throw it in the chat or just say, no, I have no clue what that is. Has anybody heard of Fannie Mae or Freddie Mac?
Yes.
All right. So Fannie Mae and Freddie Mac are the 2 government agencies that lend on approximately 90 to 95% of all conventional loans out there. They do all of your government loans, which include VA, FHA, and USDA loans. So they're the ones that set up all the guidelines, right, that all these banks have to follow. What do we do as a banker? We process a pre-approval by sending them an electronic copy of the application. Goes through an algorithm, does the calculations, and the system either approves. As you can see, you've got this approval right here. It either approves them or it denies them, okay? And we can play with all the different variables to try to figure out how to get them approved, but sometimes it just doesn't like their credit. That's been more and more recent. Like, we have people that on paper should qualify for a home loan, but it looks at their credit history and it says, no way. Like, this person has had troubles in the recent past just making regular monthly payments on a car or on a credit card. Why would I give them a house loan to thousands of dollars every month? So we've been getting hard stops with these, with credit, people with credit issues, and they're still in the mid 600s, but it won't go through.
Yeah, especially late. Like, if you were late on your car payment last October, it's a hard stop. Even if you're making 20 grand a month and you have $1 million in the bank,
It's kind of crazy.
DU's not liking that credit aspect of you being late recently.
Over the past year and a half, it's really tightened, you guys. The algorithms kind of behind the scenes have really tightened. So that's the pre-qualification process, right? You'll gather up all the paperwork and you'll submit it and you'll get an automated underwriting system approval, but you have never submitted it to the person that's actually going to approve that loan. So what good is it, right? It's just the numbers that have gone into the system that are there. Like that's all that there is there, right? Sorry, I went a little too fast. So what, like, it doesn't make any sense. Why don't you actually have a human being review this? Like, what if the person made a mistake and they put, a couple of $1,000s on a monthly basis that they get on for a bonus instead of on an annual basis? And now you've completely skewed the equation, right? And that's our job, is to really understand how to calculate this income. And why is that? Because when you do get into escrow, the last thing in the world you want is for it to fall out because of a lender. Okay. And I can proudly say I've had zero ever fall out because of me. It's always because of something to do with the property, right? Or the client just changed their mind along the way. And I will take that all day long. But I know that I am so thorough and so diligent in doing what we need to do up front to make sure that you have, your client is good to go. Like if I tell you like this client is pre-approved, we're going to close that loan. And that is the biggest safety net that you can ever have working with somebody. So when you open up escrow, right? Please, please, please make sure to CC your lender when you're submitting the offer. Let's start there. I need to make sure that I reach out to that listing agent and introduce myself. I was talking to one yesterday afternoon. He goes, you know what? The fact that you picked up your phone on a Sunday afternoon, he goes, we're golden. Like, I am so stoked that you actually did that. You go to these banks and these credit unions, good luck getting someone's cell phone number. And for them to pick up the phone after hours, 9 to 4, 10 to 5, like they check out. There's my office line. If I'm not there, if I'm not at my desk, I'm not ringing. This is the only phone I use. Like it goes with me everywhere. And I will pick up the phone and return the calls every time we need to do it, right? Because we're on a team. We're trying to make this happen. We got to work together, right? And we got to make people's dreams come true. Honestly, like it's incredible what kind of opportunity that we have to work with folks. So you get the contract, you've CC'd us, we made the call, we call you back, we're like, hey, this is what they said. We've got this in the bag, or they're contemplating this or that. We try to pull out as much information as we can from the listing agent to help in maybe in a counter offer, or maybe renegotiate the terms to make it more favorable if they have multiple offers. So we're going to bat with you guys. What we're going to need once you open up that escrow, and this is where Dana shines, right? We're going to need that. Yeah, she makes it so easy on all of us, honestly. We need that purchase contract executed by everyone's signatures, including yours, and the listing agents need to be on that contract. We need the counter offers, right? And they have to be executed as well. Any kind of addendums, any kind of advisories. When you go, I forget which page it is now. I think it's like 3 or 4 with all the addendums and advisories. If you check any one of those off, we need a copy of those executed as well. Title and escrow information is clutch, y'all. That'll help us expedite and have to save us from making calls to try to figure out who's part of the transaction. I know Dana puts out this email that really gives us all the players, and she does it really quickly. The quicker that we can get that from you guys, the easier it'll be on us to kind of expedite the process, especially if we have like a 9, 10, 12 day escrow. We're on it, so we can't lose any time. And if that is ever the case, y'all, we need to be in cahoots with each other and make sure that our clients know that, hey, if the lender asks you for something, you need to get it back to them within an hour or two. Like, there's no waiting for the next day. There's no like, I'll get it to you when I get home. Like, you got to get on it. If we're doing something in less than 2 weeks, to close a loan from beginning to end in 2 weeks is fast. And so we all need to be on the same page. So we've opened up escrow. You guys have gotten us all the information. You got us the contract. Our file, the way that we process it, okay, is we actually will, and here's a site, here's the page number 4, like I said, 3 or 4, right? Here's the page with all of the addendums. So as you see, if anything is marked off of here, this needs to be included in the contract, please, when you send it to the lender, because otherwise we have to ask for it. So once we open up escrow, you guys, we are shotgunning it. And again, page 10, this needs to be signed, you guys, by everybody. We're shotgunning this to everyone. Like everybody is getting this. The disclosures department is getting it. The appraisal department is getting it. The underwriter gets assigned. Like everybody and their mothers is jumping into the file all at once, okay? To make sure that everything is dialed in. My assistant is on there. She's the one that processes it and gets it over to the processor, right? Gets everything dialed in, gets everything lined up, make sure like everything in the contract is in our software so that everybody knows like all the players. That's why it's so important to have the players, because we need to reach out to title. We need to reach out to escrow. We need to ask them for all their fees to be able to disclose accurately. Otherwise, we're sending out like guesstimates, okay? And we want to be accurate right from the get-go, because people want to know what their numbers are. We can give them a ballpark, and we do when we go through their mortgage coach up front, but we want to be as accurate as possible when sending them a loan estimate. So all these people have gotten the file. The condo department, right? They're ordering condo docs. This is all on day one, you guys. The disclosures department, they're working on getting the initial disclosures out. The underwriter will be assigned day one. The underwriter now has 24 hours. The clock is ticking to get that file underwritten. The big difference between Movement and every other bank out there, you guys, is that every other bank processes loans first. We underwrite loans first, and then we process. And what does that mean to you, right? What does that mean to our clients? So we've already gone through upfront underwriting. So we know all the income and asset documentation that we needed. All of that had already been approved. The underwriter's already taken a look at it. All I need to do is reach out to our clients and say, hey, can you please provide us with an updated bank statement, updated pay stubs, if we've gotten into a new month, what have you. Depending on how old the file is, like some people, some people shop for months and months and months. After 90 days, we're going to need to rerun their credit. So, but if it's within a 90-day span, we don't need to. So that's great. We can just keep going with what they've got, and hopefully they haven't made any major changes. So we're getting all this documentation in, and it goes directly to the underwriter. My assistant's going to trigger that file. She's going to submit all the documentation that we need. She's going to scrub everything and make sure that we have everything that's up to date, everything that the underwriter needs. They're going to re-review their income and assets and make sure nothing's changed. And they're going to start looking at the contract to make sure that all the contracts are within parameters. And now they're going to condition us on any kind of paperwork that we need for the contract, for the property. And at this point, usually what my only updated document should be at this point, homeowners insurance, and maybe some updated income and asset documents if the borrowers haven't gotten it to us quick enough. Otherwise, it's just an appraisal, title paperwork. We need stuff on the back end in relation to this property. But we do things up front. We don't wait for anything, right? We process the loan before you ever get into escrow. You go to a different bank, this is when they start processing the loan. This is when they start asking for that paperwork. This is when they start asking for your pay stubs and your bank statements. And, and even if they did receive it beforehand, which is great, they never handed it to an underwriter. So now they have to have a processor assigned to it. The processor has to re-review everything that my assistant and I already did, right? A different processor would have to look at, oh, well, I think that the underwriter is going to want this. Then the processor is going to reach out to them. This is going with another bank, right? So they're going to start processing the loan right when you get into escrow. Then they're going to hand everything over to an underwriter. So you already had 2 or 3 days here. Then you're going to go to the underwriter. They're going to wait another couple of days before they get to your file. So now you're like 4 or 5 days into the loan, right? And you're ticking away on your loan contingencies. And finally, the underwriter looks at it. They go back to the processor. They say, hey, we need these documents. The processor has to now go back to the clients and ask for more documents. Why? Why on God's green earth would you want to live through such a convoluted process? We literally will. Matt and Katie and I do such a thorough job up front. We take the documentation that we know that they're going to need, because I've been doing this for a decade. We're going to hand it to the underwriter up front who reviews that loan on day one. And she's going to condition the file. And she's going to tell me I need a homeowner's insurance quote. And then she can get the paperwork on the house and we can close the loan. So we literally within a week, because my processor has 7 days to process a loan. Underwriter's got 24 hours, 1 day. She has 6 days, 7 days to process the loan. Okay. And the closer has 1 day to close. So, and when I say 1 day, the underwriter, we strive for 6 hours for underwriting. So it's our 671 process, and it doesn't fail. It's pretty awesome. So what happens next after we've shotgunned this file out? Borrowers have 3 days by contract to get their money into earnest money deposit, right? And I don't want you guys touching any paychecks. Don't touch any checks from your clients. Make sure that you always tell them to call that escrow company to verify those wiring instructions. Because once they send that wire, they can't get it back. Okay. And some of these earnest money deposits are pretty hefty. You don't want them sending out $20,000, $30,000, $40,000 to somebody who knows where in what country, and you're never going to see that money back. So I always have my clients call to verify that, especially when they're sitting at the bank to send it off. Okay. No cash, no money out of the mattress. This has got to come from an account that's been verified with the bank. Okay. If it's going to be a gift, we're going to wait and have mom or dad or whoever's going to wire them that money to wire it directly into escrow. We don't want it wired to the borrower, because then we have to start digging into the other people's accounts, and we don't want to do that. We don't have to do that. All we have to verify is what account it came from, and as long as it matches up with the gift letter, we're good, as long as they transfer it into escrow. So you guys all following along? I'm going really fast. Kristen, yes, we got a question.
Is there a limit on gifts that can be transferred directly to escrow?
Nope.
Okay.
Nope, not at all. So, and I think that your question is pertaining to said $15,000 a year that a family member is allowed to gift them.
Yes.
Okay. So, so from a finite standpoint, there's that law in place, but there's also an estate gifting law that's in place for the IRS. Estate gifting is up to $12.5 million can be gifted without taxes. You have to track how much you're gifting. And then it needs to be declared to the IRS. As long as you're tracking that and you don't go over that 12.5 million, you don't have to pay any estate tax on it. But you can gift however much you want. You just need to track it.
Okay. Thank you.
Yeah, absolutely. Good question. But it should be sent into escrow. Please don't have them send it to the borrower. And please make sure when you're speaking to them and they opened up escrow, that tell them they're like, hey, if you're going to be making any kind of financial moves or moving money around, please make sure to speak to your loan officer first before making those movements. Because sometimes people will move money out of like a Bitcoin account or out of whatever, like some account that they didn't give to us. And we're like, where did you get this money? And then all of a sudden we see a huge deposit came into a different account, and then we can't use that money and things go sideways. So just let's make sure that you guys, we're all communicating to them. Don't make any big moves while you're in escrow or right before it, financially speaking, right? So that's the earnest money deposit. This is the loan estimate that I was talking to you guys about. It breaks down the logistics of the loan, and this is what we need to disclose to them up front. We have 3 business days. Every bank has 3 business days to shoot these out. I have had some newer clients be really adamant about getting loan estimates to shop around for different mortgages. And that's good. That's fine and dandy. Just understand that only one bank only sends out 1 estimate at a time until the rate is locked, and then they'll send out a rate lock estimate. And the big difference is that up here it'll say the rate lock is no. And I should probably update this because 2.875, I keep saying that, is not going to be seen for quite some time. Maybe I'll just leave it there for prosperity's sake, you know, and see what $3,000, $4,000 bought you back then. All right, moving right along. So on the loan estimate on the second page, you guys, it'll also give you a breakdown of all your costs. So you can see what the bank is charging, what all the ancillary fees are, title and escrow fees, again, every single loan is going to be a little bit different, right? Sometimes it makes sense to buy points, sometimes it doesn't. These are all discussions that we have with our clients on the front end before like we ever like lock it a loan or anything like that, just to make sure that they're very well aware of what the fees are. This is a huge component, you guys, especially right now, this time of year, of your closing costs. Right now is the most expensive time because you're collecting almost 11 months of taxes. If you think about it, if you close a loan in October, your first payment's not till December 1st, and that's when 6 months is due of payments. And then, you know, in Southern California, you know, you have 6 months that are due on the first half of the fiscal year, like in December, by the beginning of December, and then again by the beginning of April, but you don't have 6 months in between those. And so it's always really important to let folks know that, you know, you're going to have quite a bit due towards the end of this year. And we always go over all these figures so that they know. If you have any questions about any of this stuff, just stop me. Then we're going to go over and they're going to take a look at, oh my goodness, look at in 5 years, I'm going to pay, you know, this much in principal, interest, taxes, and insurance. A lot of times this is a game changer. Like it'll open someone's eyes and like, holy smoke, you mean I'm paying this much money like in 5 years? Yeah, well, guess what? You're going to be paying down the principal of almost $80,000 in that 5 years instead of renting for $3-4 grand and pissing it away. It's a huge wake-up call when we show these folks these numbers, because we go over this kind of stuff up front, so people see all this. So now that we've gotten all that out of the way, with they signed all their initial disclosures, now we've ordered the appraisal, right? That appraisal is usually back in 3 to 5 days, typically, sometimes up to a week. That's why we want to get it ordered ASAP, because we can't get it ordered until they sign their disclosures. So like right away, we're getting those disclosures out same day. Usually if it's towards the beginning of the day, if it's in the late afternoon, it might go out the next day. But we're hustling and bustling to make things happen here. So our appraisal comes back, right? And we're going to want to take a look and make sure that they have the right contract price. It's really important. We're also going to want to see, you know, what kind of repairs are noted on this appraisal. And you'll be able to see it down here. Now, we're going to have a much more in-depth appraisal class. I think it's in November is our appraisal class. I'll send you guys that out. It'll be on a Movement Monday. But the main part is that, hey, this is what our contract price is. This is what the appraised value came in at. And we're going to want to make sure that there's no sort of repairs that are noted in here, that it is as is and not as if it needs to be repaired, not conditional to a repair. Here's the big number. When you start seeing all your comps right here, this is the number that you want to focus on. As long as this number is greater than or equal to that contract price, you're golden. You're okay. You'll also see on the same page down here, it'll say as if or subject to repairs. You want this as is. But even though it says as is, you still want to take a look at the pictures, right? I always open up the PDF and I'll Control F, do a search and type in the word repair. And then I'll look through the whole document and see what kind of repairs that they called out, if any, right? But I'll also look at the pictures, because sometimes an appraiser will take a picture of something that he finds questionable, and then you'll have the appraisal underwriter take a look at that same picture and say, oh gosh, we're not, you know, this kind of looks off. We like, let's get a second inspection on it. Like we had a roof, right? It was a conventional loan, but we had a roof that had a picture on it where there was a huge chunk of it that was a different color, right? A different color roof? What? That doesn't make any sense, obviously, because that part of the roof was replaced. Come to find out, there was a massive leak because there was another picture from the inside where it was all moldy right underneath where that roof had leaked. And so, yeah, the appraiser underwriter had asked for a subsequent roof inspector to go out there and come to find out that there was a massive leak and the roof needed to be replaced because it was never replaced. And, you know, the transaction, the borrowers wound up saying, you know what, I don't want to deal with this. This is too much. We could have flipped it to a renovation loan at that time. We could have actually included the roof in the transaction, and all the money to pay for it, but it was just too much. It was not in good shape, and so we had to call it quits and bail on that transaction.
Yeah, but these pictures don't have to be something as catastrophic as a roof leak or stuff like that. There was one with like a little bit of calcium buildup next to a water hose hookup next to the side of the house, and we didn't know if it was a leak or how long, if it was broken. So they addressed that, and that just needed to be buttoned up really quick with a trip to Ace Hardware, right? So it could be something as minimal as that, or something as catastrophic to, hey man, you need a new roof.
It was really funny. I was actually, on a side note, reading an article about first-time home buyers and their biggest mistakes and their biggest regrets. And there was one part where these buyers had said that they really wish they paid attention to that sound of running water, because they had no idea what it was coming from. But they just figured it was like the water running through the pipes, right? In an older house. Well, water doesn't just run through pipes when water's not on somewhere, right? It's stationary. Well, come to find out, after they had already moved into the house, that there was a leak underneath that house, and there was a swimming pool basically underneath that house, because there was a leaky pipe that had broken, and it was underneath. But I mean, imagine moving in and not checking out the crawl space underneath. So just be mindful when you're going out there and you're getting your inspections done. Make sure people are being really thorough and actually sneaking a peek underneath the house. But yeah, calcium buildup means water's leaking somewhere. We got to double check it, make sure it's okay. So Matt's absolutely 100% correct. But it's all to protect the buyers at the end of the day. So your appraisal, repairs, photographs, and make sure that appraised value comes in. But I'll always give you guys a heads up and let you know, hey, it came in at value, it came in under, it came in over. I get to sneak a peek at the appraisal before it goes through underwriting. So I always look at it and I'll hit you up and give you that heads up. So before we even order that appraisal, we usually already have our conditional loan approval. And what's a conditional loan approval, right? It's everything that I had mentioned to you up front. So typically we'll need the updated income and asset documents. We might need the homeowner's insurance, but then if there are any kind of large deposits, we might need that, or a gift letter. We might need tax transcripts. If we have a second loan, for instance, we always order the verification of employment up front for all of our loans, but we do need to secure the mortgage insurance if they're not putting 20% down. If they're doing a first-time home buyers, type of loan, they need to get a certificate done online. We need to get condo docs. There may or may not have to be termite clearance, depending on whether or not you guys had gone through and negotiated that into the contract. A title information we need to get that. We need to source all the funds to close. We need to make sure there are no liens and judgments against them, against the house, against the sellers and so forth. All past due taxes were paid if they're getting an FHA loan and they they're self-employed borrowers and they haven't paid their taxes in a year, they got to pay their taxes first before they're borrowing more money from the government. If a family member's out of town, we're going to have someone signing loan docs for them. We're going to need that power of attorney signed. And then obviously we're going to need to know who is going to be on title. So we're going to need the vesting.
Yeah, another things that's been coming up in these conditions, and it's pretty new to this year, but not too new to us, is a lot of people are banking through the apps, whether it's through Zelle or through PayPal or whatever app it is, the cash apps, to get money to places. If they see it recurring on a month-to-month basis, since we go back 2 months of bank statements, they might condition those payments to make sure it's not something that you're paying on a month-to-month basis going forward that we have to include into your debt to income. So just to set expectations up front, they are conditioning things like that as well.
And we're not talking about a nanny or sending money to a friend, but if you have a subscription to something that should be a debt and you have a way of paying for this outside of that, they may take that into your debt to income. And I'm not talking Netflix subscription. I'm talking if you have any kind of, a car payment or credit card payment that you can see, or there's something that's not popping up on a recurring debt. Matt, give me another example of a kind of debt that doesn't come in on your credit card statement, or on your credit report.
It's a lot of subscriptions based stuff, right? We
Yeah.
saw a lot of like a watch company came up. A lot of subscription based things that may or may not pop up on your debt because you signed up through Apple Pay or something like that.
Or Zelly or something like that. So there are sorts of new ways of paying for subscriptions that don't appear on credit reports, but should. So the underwriters have been conditioning for those. So just keep an eye out, or we will keep an eye out. We'll let you know. But that's why we do all this up front, so we don't get caught later on down the road with this kind of stuff. We have to scrub all the bank statements at this point, which we never had to do before, except for large deposits. So pre-closer, right? Once we get that conditional loan approval, that's when the processing starts for us. We've already been underwritten. We're good to go. We had the underwriter review everything again. We're definitely good to go. Now we need just to get a few of those conditions and we're done. So now the processor starts reaching out to title, to escrow, to get the condos, the documents approved. Then as soon as we order that appraisal, right? And we have that rate locked, then we can get into pre-closing. The pre-closer is going to get all those fees that the processor just received, and they're going to dial in that closing disclosure, right? And what's a closing disclosure? It's just a slightly more accurate loan estimate. That's all it is. There's actually 3 closing disclosures, you guys. And that's what a lot of people don't realize. There's the initial closing disclosure, there's a final closing disclosure, and there's a post-consummation closing disclosure. So the initial one, we put it out right away. Like we don't need to have that thing totally dialed in. And why? Because it eliminates a 3-day trade waiting period. Okay. So we get rid of that trade waiting period because you can't sign loan docs until 3 days after you sign this document and acknowledge all the closing fees. Okay. So we do that right up front. As soon as that thing is locked and the appraisal is ordered, we put out a closing disclosure, pre-closer. Most banks wait till you have a final loan approval, right? Until you're at the very end of the transaction, until the CD goes out. Makes no sense. There's no reason to. Why? Because the CD is the last document that gets buttoned up between escrow and the bank. Okay. That's the very last thing. They compare each other's fees. One escrow settlement statement with our closing disclosure. They say, hey, you're off on here by a few pennies. Hey, you need to make this adjustment by a few dollars. If you make this adjustment and we're done, we're all balanced out. Okay, great. Our numbers are finalized. Done and done. That's your final one. But we need to know the exact closing date in order to do that. Why? Because everything is prorated, right? Your taxes are prorated, your insurance is prorated, your interest is prorated, right? So if we don't have that date and y'all keep moving that date, or we just keep moving it up, or we got to push it back, these numbers are going to adjust. So until we have that last date, that's when the final one gets buttoned up. That final one's the one that goes out with your loan docs. All right. But again, it looks just like your loan estimate. The only difference is these numbers are a lot more accurate. And now we start having names in here, not just like title company XYZ. Now we know exactly how much everyone's charging on the transaction, who's getting what, who gets paid, where the money is going to, and we have final numbers. And we always review these figures with our borrowers before they ever go to sign loan docs. Because the last thing I need is someone calling me up while they're signing loan docs and being like, oh my God, like, why didn't you tell me about this? I'm like, what are you talking about? We went over them. That doesn't happen anymore. It happened when I started. I'm not going to lie. Like I didn't do that. I had quite a few calls at the closing table and I learned my lesson early on in my career. So now I always review these things as soon as they go out. We get on a call and we have this open together on either computer and we go over these line by line and they know absolutely every dollar they're going to be spending on this transaction once we get that closing disclosure buttoned up. Any other questions so far? I'm going kind of quick. You guys good? All right, cool. I love it. Smart group of people. So at the very third page, you have everything is summarized. So here, everything's broken down line by line. We're going to go over those. Here is a summary of everything. Everything's totaled up. And it gives them the bottom line right down here. Here's how much money you need to come with cash to close. Cash to close is a terminology that we have in the mortgage industry that you guys don't have, but it's basically your down payment and your closing costs combined. This is how much cash I need to close a loan. Makes sense, right? Pretty simple. So again, remember I talked to you guys about the property taxes. right? It doesn't make any sense. But here, when we're closing, we need 4 months collected of impounds plus the whole first payment. So you have 10 months collected. Next month, we're going to need 5 months collected, right? So the whole first installment's paid, plus if the second installment's not paid, I think you're going to have 11 months. So it gets really expensive in the second half of the year. I wish it wasn't so convoluted, but it is. But this is how it tax impounds are collected here in California. Your closing disclosure, again, there's a 3-day waiting period. It works a little bit differently with refinances, but you guys don't need to worry about that. But basically, you cannot sign loan documents until someone signs that. And the clock starts ticking once they sign it, not one. Well, a different clock starts ticking it when we mail it. So the day that we send it out, we also mail a copy, right? All banks do. If they don't sign it within 3 days electronically, there's a 6-day mail rule. So if 6 days goes by after we mail it, they can also sign loan docs at that point. So they get rid of the trade waiting period. So we send it really quickly, right at the beginning of the transaction. And this is a little chart that just shows you, right? If you sign it here, you can, if you sign your closing disclosure on a Monday, you can sign your documents on a Thursday, right? You sign on a Friday, on a Tuesday, you can sign on Friday. So it makes it really, really simple for us to understand. Dana, wake up. Your final, sorry, couldn't help myself. So after we've already gathered in the appraisal, that got underwritten, your condo docs came back, that was reviewed, that was approved. Your loan, all your documents came back from title and escrow, that's all been re-reviewed by an underwriter. They're going to review absolutely everything from head to toe on this one last time. And they're going to give us the moment we've been waiting for, is getting that clear to close. And once we get that clear to close, yeah, that's exactly what we're doing. We are done. That is our golden ticket. That is when we are, we're finally done with the loan, and the only thing that needs to happen is for it to be closed. And so now it gets assigned to a closing team. That closing team has 24 hours to get loan docs out, and everything is handed over into escrow. So we actually table fund, which is a little bit different than a lot of other banks. Once we send the loan docs, we can send the money as well. So if we're in a hurry to close that loan, say they need to do the triple whammy, right? They need to sign, fund, and record in the same day. We can do that. Not a problem. We don't need those documents back to fund the loan. A lot of other banks, they require to get those documents back and the closer to re-review everything to make sure everything was signed, blah, blah, blah. We're good with that. We're assuming that the escrow company is going to do their job, that the best that they know how, and get everything signed accordingly. And if they don't, as long as it's not the grant deed or the deed of trust, we're good. We can get it signed at a later date. Like, it's not a big deal. We're a direct lender, so we're okay with getting a document signed the next day if it got missed. So the closing team, like I said, you guys earlier, they're going to request that master settlement statement from the escrow. We're going to send them a CD. We're going to balance, and then we're going to release all the loan documents. They're going to schedule a signing, and then once they wind up signing, we're going to wind up funding and recording, and our folks get the keys as soon as we get that confirmation, which for some reason they never tell us. Like, we got through this whole process from beginning to end, and you guys are the ones to find out, and we don't. Nobody tells us. Like, hey, guess what? We recorded. Yeah, like, yeah. They leave the lender out.
I think there's one escrow company that actually does that, but everybody else is like, hey, and by the way, did we record today? It's like, oh yeah, we recorded, no problem, we love you.
Are we good? Like, you guys are good? Like, can you get the keys over? Yeah. So that's the process, you guys, from beginning to end. It's a lot, and this all happens with us. It can happen in 8 or 9 days. So most banks out there will take like 30, 60 days to get a loan closed. Like,
well, even especially on a condo, right? Because a condo,
Yeah.
now you're waiting on another third party. You're waiting on the HOA and the condo for condo docs. We just closed one in 8 days because we did all of our due diligence up front. We got all those condo docs when we put them into underwriting up front, because we knew this is where they were looking. This is where they knew they were going to put an offer in. So why not just get those condo docs up front, even if we don't get into escrow? Rather need them and not have them than or the other way around. Have them, not need them, not have them. Right. So we're up front, always getting stuff done to make sure that you're not waiting around in these escrows, especially 10, 12 days. There's no time to wait.
Nope. There's no time to wait. When somebody tells me that they're going to get me docs at the end of the day, I'm like, nope, not going to happen. Like, I need them now. If we're closing in a week and a half, like, you got to get them to me now. Hopefully that was helpful. You guys understand everything was going through. I spoke as quickly as possible. It still took me 45 minutes to fly through the life of a loan, from beginning to end. So we do have a lot of work kind of behind the scenes that we do, but I've done so many of these in my lifetime. I could do it in my sleep at this point. So just know that you guys are in great hands, and we got your back, and we're going to communicate with you every step of the way. We've got communication systems built out, that actually my entire company is basing our new CRM communication system based off of what I've done, like with mine over all these years. I've been using Salesforce. We're now building out Salesforce, and we're implementing all of my communications into that. So it's pretty awesome to see that. We've been doing it right all these years, and now my entire company is going to be doing the same thing. So, you guys, I thank you guys so much for being here. Does anybody have any questions?
Questions?
That was a lot, you guys, I threw at you. No? All right. Well, hopefully you guys will be comfortable with the process once we get into one, because you will get into escrow, I promise you. If you do have anybody that is thinking about getting pre-approved, please don't hesitate. Like, put us on a joint text message together. A conversation can't hurt. We don't charge anything to talk to people. We do it for a living. We love doing that. And worst comes to worst, we give them a second opinion, and they love us, and we all get to work together. And if they don't, and they want to go somewhere else, our feelings are not going to get hurt. But we're here to help out any way we can. You guys all know how to get a hold of us. We're always available. Please, cell phone numbers, you guys have them, Facebook, you name it, LinkedIn, and whatever, however you want. Smoke signals I'm not that good at, but everything else I'm good at. So let me know, you guys. Thank you so much. If you guys don't have any questions,
Go out there and have a great week. Let us know how we can help.
have an
And
awesome
I have a question. This is Jody.
Go for it, Jody. What's up?
Okay, so I have a person who's buying a new build, and you've worked with the person before, but the builder wants her to use their lender.
Sure.
And I'm sure that they're not doing the approval up front like you guys do. In the event that something happens, would you guys be able to work with?
Yeah, absolutely. So we're actually one of the biggest builder lenders in the country, right? So so even though the builder insists on getting them pre-approved with their lender, it doesn't matter. They can use whoever they want. They don't have to use that lender, right? The thing is, with some builders, they'll give them an incentive to use their builder, to use their lender. So sometimes they'll give them like a lender credit if they use their own lender. Sometimes they won't. So it will benefit them significantly from using us from the perspective of, hey, we're a lot more thorough. We're going to tell you exactly how it is, what the numbers break down at. These builder lenders, they don't give a hoot. Like, if you don't use them, like, okay, fine. There's a next person in line is going to buy that next unit that will. Right? Because they're naive, because they don't understand that they're allowed to shop around, because they don't get that there are other opportunities out there to save some money on financing. We have one of the most liberal locking periods in the entire industry. We can lock in a rate for 360 days if somebody wants to use if someone's getting new construction. So if you have something that's brand new, they haven't even broken ground, I can literally lock you until next year.
And I think too, they were offering a buy down, like they were saying that they can buy the rate down to 5.5 or 5%. And I didn't understand if that was like a temporary buy
is.
down. Oh, okay, okay.
Yeah, that's not a real rate right now.
Mhm.
As real rates are in the mid-7s right now.
Uh-huh.
If you hear something like totally out of whack, it's probably a reason why. That would be a temporary. You couldn't even buy down the rate permanently if you wanted to, without spending $30,000-$40,000 on any loan at least to
Yeah,
get
if you're looking to
down
get
into
into fives today on a permanent
get
basis,
into the
bring
sixes.
your checkbook.
Yeah, you wouldn't.
Well, the
you
builder
wouldn't
is
wanna do-
offering $30,000 incentive, and they said that she can use it for a buy down.
Wow.
And
That'll
closing
help.
costs. Is it okay? So I figured it was temporarily too. So
That will probably be temporary, but keep in mind that that's a lot of money, and we will never be able to match that. So if they can get a $30,000 credit, just pay attention to the strings attached on those credits. That's an extremely aggressive credit.
Okay.
If I hear anything for credits, it's like 4, 5, 6 grand. 30,000 I've never heard.
okay.
So there
Okay.
could be a catch with that. So just be mindful. If it sounds too good to be true, you guys, it is. Like it is. There's no such thing as free money in life, right? There's no such thing as free anything, right? So there's probably a catch somewhere along the way with it.
Okay, cool. Thank you.
Yeah, totally. But yeah, keep me posted with whoever that is if they wound up getting into escrow, because even if they got something locked in, we might be able to get them, when the time comes for them to actually close on that transaction, the rates might be way better than what they locked in with this builder. So it's really important that even if somebody gets into a transaction that even we pre-approved or somebody else pre-approved, they can also always shop around. Like that's okay. I tell everybody, go out there, shop around, go for it. It doesn't bother me because 99% of the time they come back to me because they like me. And they can't get a hold of the other person, or the rates are pretty much neck and neck, and they're like, well, why am I going to go to somebody I don't know?
But the odd case that's not the case, just like Eddie said, if somebody's coming at you at $30,000 and we read it and it says that they're going to give you $30,000, we'll be the first people to tell you, hey,
yeah,
that's a great deal. We should go get that.
Yeah, you should definitely get it. Like,
Okay.
I have no problem in telling somebody that they got a great deal.
We're here to make sure that your guys' people are in the best situation for themselves going forward. Whether that's with us, that would be awesome. Yeah, whether that's with us, that's awesome. But as long as they're in the best situation going forward, that's the most important thing.
Oh,
Okay,
great
thanks.
question though. Yeah, they hook you by those design credits too. Yep. That totally, absolutely correct. Awesome. Any other questions, you guys? Well, thank you guys so much for spending your Monday morning with us. Hopefully, we'll leave you a little bit smarter for the week, and you now know what to expect. And yeah, that offer $30,000 essentially for design, though. I see. Yeah, so they might be able to do it for designs, but not for rates or what have you. Yeah, that could be a difference right there. And you never know. You might be able to get the credits for those designs, and not use them towards a rate, right? So in that case, they probably should have made sure they kept their eyes open and their ears open for better rates or better opportunities out there for their loans. All right, guys.
Thank you so much, Eddie. This is great.
Pleasure, Steph. Good to see you.
Have a great Monday, guys.